The FTX debacle. Does any form of insurance cover the potential onslaught of lawsuits likely to be filed in the coming weeks from the FTX meltdown? That's a good question, and in this video, I'll take a look at some of the issues at hand with FTX and Alameda Research and the meltdown that occurred and how business insurance may or may not come into play. I do want to make one strong disclaimer before I start. I have no idea of what insurance, if any, these firms have or may have had. My comments are based on my knowledge of insurance in the crypto and hedge fund space. So, as of the taping of this video, I know of one proposed class action lawsuit naming certain individuals at FTX, as well as a bunch of celebrity performers like athletes Tom Brady and Shaquille O'Neal, comedian Larry David, and Shark Tank investor Kevin O'Leary. I'm certain hundreds more of these lawsuits will follow involving the entities now in bankruptcy, their former directors, officers, employees, and even outside entities like their auditors and law firms. The first policy that I think would be triggered would be the firm's D&O or Directors and Officers Liability Insurance. That policy protects the company's leaders from claims like what we'll be seeing, as well as the entity is protected for securities litigation. If FTX and Alameda had D&O insurance, would it respond to the types of lawsuits likely to be filed? Let's start with the celebrity promoters. Would they be covered under the firm's D&O policy? In my opinion, probably not. They do not fit the definition of an insured under this policy. So they would need to sue FTX for some protection. Those promoters likely had some contract with FTX for the work they did in TV commercials, obligating some form of indemnification from FTX. So that begs the question, would the company's D&O policy or even their general liability policy respond to the claims from promoters? The D&O policy may provide the company and directors and officers some defense from those claims, but most D&O policies exclude obligations imposed under contract, so no settlement amounts would be found here. Also doubtful that any general liability insurance policy on FTX would respond, since the allegations from the promoters would revolve around contractual disputes, financial damages, and really not involve bodily injury, property damage, or personal injury, which is usually the domain of general liability coverage. Bottom line, possibly some limited defense coverage for the insureds to fend off claims from the promoters who are being sued, but no real coverage for the promoters. On top of that, with millions of potential claimants, the promoters are going to need to get in line with everyone else. Next question, would any of the executives find coverage under the D&O for claims which may be arising? If there is a D&O policy in place, coverage, if any, would be extremely limited due to a key exclusion found in most D&O policies, and that is any deliberate criminal or fraudulent act or any willful violation of any statute, rule, or law exclusion. Now, all the facts of what happened, how they happened, and why they happened aren't known at this time, but early reports of the circumstances surrounding the downfall of FTX and Alameda appear to fall into the criminal, fraudulent, and willful violation bucket. I think if there is insurance in place, most of the insurers will look to quickly assert this exclusion and get out from these claims. While there may be some final adjudication wording in any possible policy, insurers will likely balk at paying much in defense costs through this litigation. Now, stepping aside the coverage and exclusion conversations, the other big thing here is limits of coverage. Having worked on several crypto firms, I can tell you that getting D&O insurance is expensive and difficult. A lot of folks in this space are insurance averse and would rather take potential premiums spent on things like D&O insurance and use them instead for growing their firms or investing those dollars. And they've said to me, I'd rather just pay for potential claims out of pocket down the road. The point is that FTX may have had D&O insurance, and if they do, the potential limits of coverage will be really dwarfed by the size of the lawsuits they're going to face. For a situation the size of what we're looking at, it's impossible to get or to afford the types of limits this meltdown would have required. Another bit of news coming out was that there was a potential hack from FTX alleging about $370 million of crypto funds were missing. So that begs the question, would cyber insurance or crime insurance pay for this type of loss or any portion of it? Maybe, but any coverage would likely be very limited, and here's why. The insurance industry does not love crypto. There are a handful of insurance companies that will entertain insuring cryptocurrency if all the right underwriting factors are in place, but capacity for theft of cryptocurrency is limited, and total coverage may be limited to just tens of millions, not hundreds of millions of dollars. On top of that, most cybercrime policies don't cover, unless specifically endorsed, theft of third-party funds, meaning funds you hold in escrow, which I think most of these funds would be. Then, of course, you've got to factor in the pricing of this coverage, and my thought is that many crypto managers would say, thanks, but no thanks. Our security protocols are bulletproof, and I'm not paying that premium for some limited protection. Whoops. Here's the bottom line. It looks like we're talking about $11 billion in investor losses. There's going to be a lot of pissed off people looking to be made whole. If there is some insurance in place, my bet is that most of it will not come into play due to the exclusions I mentioned, and the potential limits of coverage will be so small compared to the overall claims that there's really not going to be much recovery from insurance. Have other questions on business insurance for crypto or hedge funds? My contact info is coming up and it's in the description box below. Reach out and let's chat. Thanks.